Do you all remember this headline from CNN Business back in August? I mean, it pretty much shut down the internet. Michael Burry of Big Short fame just bet 1.6 billion on a stock market crash. This made for great headlines as he didn't bet the actual 1.6 billion. It was notional value because he went in to bet against the stock market via options. So Barry was making a bearish bet against the S&P 500 and the Nasdaq 100. He bought 866 million in put options against a fund that tracks the S&P 500 and 739 million in put options against a fund that tracks the Nasdaq 100. But again, um, his bet, he didn't put 1.6 billion on the table. That's just what the options were worth. Now let's fast forward to today. What did we see today? Well, we had CPI, and that met expectations, which means that inflation is at bay at the moment, and we saw a huge rally in the overall equity markets. So, but that wasn't the only rip today. The stock market has been ripping higher for the past several weeks. So what did Burry do? Well, he closed his bets against the S&P 500 and the Nasdaq. So again, he got it right back during the subprime mortgage, also known as the uh, Great Recession back in 2008. But this time around, he did not get it right. So Burry's hedge fund Scion Capital disclosed Tuesday in a federal filing with the SEC that it had closed out put positions on the SPY and the QQQ as of the end of September. Those bearish bets amounted to more than, again, great headlines, 1.6 billion as of the last trading day of the second quarter. The indices fell 3.6 and 3% respectively during the third quarter. And Scion Capital broadly shrank its exposure to the stock market in the third quarter, according to its new SEC filing, selling 76% of the stocks it disclosed at the end of the second quarter. So yes, he has his fund, and he's trading like a day trader. Now, again, his claim to fame was the Great Recession, where he shorted the housing market, but his track record is spotty at best. Let's go through some of his trades. In December of 2015, he predicted a stock market crash in the following months, but the S&P stock 500 saw an 11% gain in the subsequent 12 months. In May of 2017, he predicted a new financial collapse, yet the S&P 500 recorded a 19% increase in the following 12 months. And then in September 2019, he forecasted a stock market crash due to an index ETF bubble, but the S&P gained 15% in the next 12 months. In March 2020, he purposefully held a bearish view, but the S&P surged by 72%. Are you seeing the pattern? In February 2021, he predicted significant stock market declines due to a speculative bubble, yet the S&P increased by 16% in subsequent months. In September 2022, he forecasted further failures and that the lows hadn't been touched, but the S&P performed positively with a 21% gain. And then in January of this year, he foresaw a recession and a new cycle of inflation, yet the S&P achieved a remarkable positive performance. So he loves shorting. However, the stock market is designed to go up over time. With that said, let's kind of look at what the SPY is doing nowadays. So this is the monthly chart. And what we can see is, now I'm going to take these lines off. This is actually a monthly buy level at 410. You have a rally in price, base and candle rally out, price pulls back to that 410 level to a T and then rises. Let's take it down to the weekly chart. Right, this was the rally out, taking out the pivot high to the left, and price will retest in the next week or two this daily sellers level at $460 once again. Here was the level. Let's zoom in so we can see that level a bit closer on the daily chart. Alright, so the level is, we had a drop in price, base and candles, and then the collapse. And price, this zone held multiple times, and then again, most recently back in July. But like I said, prices have been moving higher. This is that gap up I was referring to. We had a gap and go, and expect the retest of this daily sellers level at 460. Let's go to the QQQ. And let's zoom out to the monthly chart. So price was in a downtrend on the lower time frames. However, there was support here. Let's scroll down to okay. So we had a rally in price, a base and candle, and the rally out. Price came into that level once and then actually closed below it, but then rallied higher. And we are less than 25 points away from creating an all-time new high. Let's see the price action on the daily chart. Now he sold out at the end of September, and rightfully so, right? The stock market has been resilient. You have the 200-day moving average still moving higher and serving as a dynamic support. Next year we're going to see rate cuts, and that's going to fuel the market because potentially we are going to go into recession. But the stock market is a forward thinking machine, and so it's looking 9 months down the road in terms of the economy and the current state of the economy. So next year, I mean, we got 6 more weeks. I don't anticipate breaking all the highs by the end of the year, but next year I can definitely see it. So good for you, Michael Burry, for getting out. What's the lesson learned? Sometimes you may want to go long the market. Thanks for watching. Subscribe. Please like the video.